Hello, I'm Don Tapscott,
And I'm Alex Tapscott.
and we'd like to welcome you to the first episode of our weekly video series, What's on Tap? I guess Alex, the tap is obviously a reference to our common surname. I don't know, what is this thing going to be? A weekly analysis, a banter, a rant? How would you describe it?
Yeah, maybe a rundown of all the most important things that have happened this week and an unfiltered analysis of what it means, why it's important, and why everyone should be paying attention.
Okay, this should be raw. It should move quickly, and we're going to be the one take top Scots here. So, Alex, let's start with the Coinbase IPO, or I guess it wasn't an IPO; it was a direct listing. This is like a market cap that's bigger than Nasdaq and the New York Stock Exchange combined, and lots of people have commented on it. What's your take?
Yeah, well, definitely it was a watershed moment for the entire cryptocurrency industry. And I would say a watershed moment for financial services writ large. Coinbase is the largest exchange in the United States. It is not the largest exchange in the world, but it's the one that's well known. It caters to institutional as well as individual retail clients. And it's the one that has the strongest backing from VCs and other large, financial backers. And the IPO itself was a success in that the company's guide price was $200 per share, and it ended up settling in at around 300. I think probably it didn't meet the highest expectations that people had of it, and as a result, what we've seen is Coinbase as a proxy for Bitcoin and vice versa have both been trending downward since that day. So I think at least for now, so long as there aren't other companies available to invest in the US, that Coinbase will act as a proxy for the price of Bitcoin, for better or for worse, for a lot of institutional investors. But remember, this is a darling Silicon Valley company. I shouldn't say startup. When you're at $90 billion in market cap, I don't think you can call yourself a startup. But this is a company that for the first time, institutional and regular investors will feel comfortable owning. And that's going to, I think, broaden interest in the crypto asset industry writ large. And overall, I think it's a very positive thing. What's incredible about this, of course, is that Coinbase is choosing to go at this in the old-fashioned way by going public on a stock exchange. The biggest exchange in the world, Binance, took a very different route. They don't have a traditional capital structure the way Coinbase has. They have a native token, BNB, the Binance coin, which in the aggregate is a market cap itself of around 50 or $60 billion, depending on the day. So it's interesting that Coinbase, despite being so innovative, chose to go at it the more traditional route. I'm not sure if it's a harbinger of things to come, if more companies will consider the public route, but certainly it was an important moment for the industry.
Well, it's part of the whole explosion of interest in digital assets and crypto. And one that strikes me out right now, it's a very volatile market, but one that strikes me is Ethereum. That while everything else is kind of going up and down, generally up, Ethereum is really hitting all-time highs. What does this say about Ethereum and the market overall?
Well, I think for one, it points to an overall maturation of the space. Ethereum is where much of the major innovations in the crypto space have occurred in the last couple of years, everything from stable coins to NFTs, crypto collectibles and the like, and decentralized finance, DeFi, probably the most intriguing and fastest growing area of all. Ethereum has proven to have lived up to its potential in part as a general purpose platform that allows you to program applications that do more than just move money around. And as a result, the native token Ether has benefited enormously from that. They are facing challenges today in terms of scalability and the transition to ETH 2.0, sort of their next stage of growth. But at least for now, it's quite clear that a lot of value accrues to the token on a network that is used widely but for lots of different reasons. And this is the biggest proof point of that. The ratio of Ether to Bitcoin today has been trending down steadily. So in other words, Ether is becoming more valuable relative to Bitcoin, even though both have actually been going up overall. And it's actually very close to the level it was in 2018 You may recall that was the time when people were talking about the flippening of Ether and Bitcoin. So unclear whether or not that is going to occur. And generally speaking, when people start talking about the flippening, it starts to go the other way. So we'll see. But I do believe that the value that is accrued to Ethereum is because of its usefulness. The last time around, it was because of speculation and ICOs and so on and so forth. Now we're seeing widespread use of the platform. And what's amazing is that we're starting to see that trickle into governments and large corporations. So the European Union just issued a bond on the Ethereum network, $100 million bond, a watershed moment for the fixed income market, to be sure. But we're also seeing the NBA, Disney, and other large companies looking at NFTs, and all of these things run on the Ethereum network. And then even stable coins, you see MasterCard, Visa, and others embracing these as the future of payments. Many of those stable coins also run on the Ethereum network. So you're starting to see this isn't just about startups and the like. This is widespread innovation, and it's starting to touch parts of the economy that, at least to date, has not yet been touched. And that, I think, is quite exciting.
Yeah, it raises some interesting issues, doesn't it? Like if you look at the price of any of these platforms or assets right now, they're a function of all kinds of things which are not necessarily related to value. Like in the stock market, the tonic of the market and all kinds of really smart investors and analysts and the whole industry gets brought to bear, so that stocks roughly correspond to their actual actual value of the company to return earnings to its shareholders, and possibly linked to its potential to grow in value for the sort of growth stocks. Whereas you've got things like Dogecoin that it's hard to talk about the value of that, but it has a big value. And so to your point, I guess Ethereum has real value, and there are platforms like that that are probably underpriced. I know you and I have talked about Cosmos over the years, but platforms that really do something and have a growing list of actual organizations that are using them to create value for themselves. So it's kind of an interesting shakeout period, isn't it?
Yeah, well, Warren Buffett said that, in the short term, the market is a voting machine, and in the long term, it's a weighing machine. So when you get these cycles of excitement and exuberance in the crypto market, people are, voting with their dollars. They're, going into things that they think have a promising future, going to be very, hot and successful down the road. But in the long run, value, in terms of the value of these networks, does accrue to the ones that have some weight to them. And in this case, we're seeing the weight of Ethereum's network playing out across all these various different kinds of applications and use cases. But what we're starting to see is a kind of future that I think few people expected. Certain smart people anticipated this, basically like a multi-chain future, where in fact a lot of applications and a lot of use cases like stablecoins aren't necessarily confined to a silo of a specific blockchain. Like they don't need to necessarily run on Ethereum, for example. And we're seeing some of these emerging platforms like Solana and like Cosmos, and even things like Matic, which used to be called Polygon. This is really just sort of a side chain of Ethereum, but it's helped to scale applications and now has accrued billions of dollars of value. We're starting to see this sort of like a mix of different kinds of technologies knitting themselves together and allowing applications to run across these different platforms. It's not unlike the internet in the early days, this idea that you had sort of communicating protocol that would sort of knit together this disparate network of networks. And they're starting to see that play out in the crypto space. None of this was bound to occur. It's not like this was an inevitability. This is because of the technology development of lots of very smart people. Some of the smartest people in the world now work in this industry, working on projects like Solana, like Cosmos, like Polkadot, and others that are actually helping to create this infrastructure that actually allows these real world applications to run seamlessly, and not in a specific computer, in a specific technology silo per se, but across this network. And that's quite exciting. That's a big leap forward as I see it.
And I noticed last week you had the Cosmos Polkadot sort of integration. People have talked about the roller coaster. I'm not sure it's a good analogy for the crypto marketplace because none of these analogies are, but roller coasters start somewhere and then they go up and down, up and down. They end up back down where they started. Digital assets, while volatile, I think the overall trajectory is one that's up. I mean, as we increasingly are digitizing all of these financial assets that used to be in a non-digital form, and overall, and creating new kinds of assets as well. And
Yeah.
while there's volatility, and while some will win and some won't, the arc overall is a positive one, A. And I think B, we're also in the early stages as well.
Well, I will say this, that with all technology, the technology comes in cycles. And we had a mini cycle in 2017 and 2018. And now we're in this much larger cycle. The value of the crypto asset market is about twice what it was at the peak of 2017. Generally speaking, the second leg doesn't top out at double the size. It usually tops out at 5 times the size or 10 times the size. We've seen this play out, in the technology space. The market cap of Apple and Amazon combined today is greater than all of the value that was lost in the dot-com crash, for example, right?
Right.
So the size of technology, the internet, has proven to massively dwarf any kind of over exuberance that happened the last time around. It just takes some time. So there will be pits and valleys and setbacks along the way, and nothing that we say on this talk should be construed as investment advice. But the reality is that it's still early stage. When Visa and MasterCard and PayPal and Tesla and Facebook and all these companies start to take this stuff seriously, which they have, that the rest of corporate America, governments, and other institutions aren't far behind. And when that happens, it's going to make the first and second wave of this cycle look like kid stuff in the grand scheme of things. And, what inning are we in? Maybe the second inning of this game, to use an overwrought analogy, but it's true. There's still a lot more of a ball game to play here.
Well, and one of the advantages of being old is that I've actually seen all of this going back to the 70s. And your description of this is like the early days of the internet, I think actually kind of works. Some people watching this may not remember, but in the early 1990s, the internet was fragmented, at least in terms of the enterprise, into private intranets that didn't communicate with each other. And this was a protective step that companies took because the internet was all about crime and porn. It was the Wild West and a place of chaos and calamity and recklessness and so on. And the same thing is kind of happening today. Hey, let's move on. I noticed that you were interviewed about sports.
Yeah.
Was that a bucket list thing? Maple Leaf star Austin Matthews unveils NFT collection for auction, joins digital sports, blah, blah, blah. What was that all about?
Well, I finally made it into the sports pages, but not as an athlete, unfortunately, as a commentator on NFTs. So finally,
you were in the Toronto Star as an athlete. I remember as a rugby star.
True. Yeah, but it's been 15 years. So I'm back in it, but not as an athlete. It's I don't know. It's a convergence. It's worlds colliding. I get to talk sports and talk NFTs at the same time. What greater thing is there in the world? But yeah, it was definitely a bucket list thing. So for our international audience, Austin Matthews is one of the most popular players in the NHL, the hockey league here in North America. He's a total rock star, sharpshooter, goal scorer. For our international audience, he's like the Lionel Messi of hockey right now. He just puts the puck in the net, and people love him for it. And he's also kind of a part of a new generation, younger, a bit more outgoing. Hockey players are notoriously boring, frankly, in terms of how they approach the media and sort of new technology, in contrast to, say, soccer or basketball, where the athletes are huge brands. So what you're seeing is these NHL stars looking at NFTs as a way to, expand their reach, to tap into maybe a new, younger audience, to raise their brand value. and Austin Matthews. And also, I should add, to give back to the community. Every hockey player so far that's launched an NFT has made sure that a part of the proceeds of the sale go towards a charity of their cause. And maybe I'm putting the cart before the horse. NFTs, for those who aren't aware, non-fungible token is what it stands for. So the fungibility just refers to its uniqueness. So things like dollars and Bitcoin are very fungible. You can trade $1 for the next dollar. There's no difference. But things like artwork and collectibles and the like are unique, right? So there's only one Mona Lisa, for example, to use an extreme sort of use case. And so what hockey players, basketball players, artists, musicians, and other sort of creators of value are doing is minting these NFTs. And basically, they are unique, scarce digital assets that only exist in one place at one time and can be stored, shared, displayed, sold, just like any other kind of asset, art, or collectible. And they've become a massive marketplace. They've become a really powerful tool that have allowed artists, for example, to monetize their value that they create, particularly digital artists. And we saw one of the largest sales ever for a living artist. The digital artist Beeple sold an NFT for $69 million just a few weeks ago. And this is an important sort of step forward for creators. One of the big challenges of the first era of the internet was that when you create something like a piece of art or a song, a JPEG or an MP3 or whatever, it can be duplicated and copied a million times. And so the value of the original, so to speak, goes to zero, basically. And it also means that it's harder to get paid on an ongoing basis for your things that you create. So in the old days, artists used to get royalties from record sales. Now they have to rely on Spotify to pay them out of a black box. So what NFTs allow for is for artists to actually take a cut of resale on the things that they sell. So on things like Nifty Gateway and on Dapper Labs, these are, NFT platforms, you can actually program into an NFT when you mint it, that every time it's sold or resold by the next buyer, that you get to participate in the upside. So you get 5% or 10% or whatever it is. This is actually something that we talked about in Blockchain Revolution 5 years ago.
In fact, I have a piece of art from 6 years ago that I bought using Bitcoin, of which that is part of a broader piece of art. And every time the main piece of art is sold, I get some of the value.
Yeah.
So nothing so powerful as an idea whose time has come.
Yeah. Well, I mean, when we wrote Blockchain Revolution, we had this chapter on creative industries. And, a lot of people were like, well, what's that got to do with anything? Isn't that sort of small potatoes? Well, it isn't actually. Intellectual property and art and music are huge industries. And they're important industries for our economy, but also for our culture and for society. So figuring out ways to ensure creators get paid fairly and on time and in a transparent way is really important. And NFTs have proven to be quite a powerful tool in helping to create that reality. So it's an exciting space.
Yeah. So we're running out of time here. We want to try and keep these to half an hour. And I want to describe a bit what's going on at the BRI. But another big one is China's central bank digital currency. And of course, the whole world, at least the plugged in world, has been watching as we move towards state-based digital currencies. And we had some big developments this week with China doing partnerships. Why don't you tell us about that, and we'll talk about it.
Sure. So China's central bank digital currency, called the DCEP, has been underway for years. We've talked about it before in research. It's by far the most developed project of any major nation state. And this week, they took another sort of leap forward by engaging Alipay and Tencent, two of the largest corporations on the planet, and basically the duopoly that controls huge swaths of the Chinese digital economy, to basically turn over their databases and all their systems and information so that they could expand the DCEP. Now, if you read the Chinese papers, it was a harmonious collaboration between government and private sector. Anybody who's been following Chinese industrial policy for the past 6 months knows that the government has been taking a way stronger approach to the private sector. They've assumed a huge ownership interest in a bunch of companies. They basically squashed Jack Ma's IPO.
Well, that was a harmonious collaboration with Alibaba, wasn't it?
Yes, harmonious, very harmonious. So, come hook or by crook, the private sector in China has now become an arm of the state once again in achieving this goal, and that's now being applied to this digital currency. So, to me, that just says that China is deadly serious about making this happen. This isn't innovation theater. They're not trying to do some project for the sake of doing it. They want to roll this thing out. And this is a huge escalation of that strategy, I think. So stay tuned for more on that. And hey, by the way, before we go, I know that there's been a lot going on at the BRI recently. Actually, just last week, you had this great webinar on digital identity with the Hyperledger folks and a couple of others as well. That was an amazing discussion. Do you want to talk a little bit about that?
Yeah, just briefly, for everyone who's not familiar with the topic, our data, the asset class of the digital age, gets created by us, but it gets captured by digital conglomerates. A term, by the way, Alex, that I was trying to figure out, when did we invent that idea? It was a 2006 paper. We've actually posted it on my personal website, dontapscott.com. But we said this is a new species of business that can evolve into adjacent or not so adjacent industries because of their ownership of data. So they create this value, but or we create this value, but they capture it. And that results in a lot of problems. It's not just privacy. We can't use the data to plan our lives. We can't monetize the data. The data is not secure because it's on central servers. We can't use the data in, say, a pandemic for social causes because it's buried in silos, and our privacy is being undermined. And privacy is the foundation of freedom. So the issue here is we need to get back our digital identities so that we can manage them for ourselves and responsibly. So we had a big discussion about that, the notion of a self-sovereign identity. It was just a terrific conversation. And it was full. We were turning away people, as we do with these webinars, Zoom limitations. But it was so good that people said, "Look, we want to not just to access that. We'd like to get a transcript." So what we're doing is turning it into one of the BRI reports. And unlike the reports, which are proprietary to the members only, they have to pay, a couple $100,000 to get access to this stuff. We are going to be making it publicly available in the Creative Commons, as we did with a month ago with our big report for Biden-Harris on rethinking technology strategy for the American government and the American economy and in society. We also did that recently on our big report on blockchain and pandemics. So people can stay tuned for that at www.blockchainresearchinstitute.org. And I'll mention just another thing that's happening at the BRI. Stay tuned next week for some big announcements. And I can't give away the details, but I'm happy to report that we've weathered the pandemic and we're now moving into a major growth period. New companies joining the BRI, and we'll be announcing that. But also we're doing a global expansion. So we have offices in South America and in Western Europe, but we're going to be announcing a major expansion into Africa and creating the BRI Africa, the BRI Middle East, and we also have the BRI in Korea. We have wonderful partners for each of those. So I don't want to take the wind out of the sail of the big announcement next week, but when people see who are the details of our partners in these countries, I think they're going to be pretty interested. So time to get this party started. Got a new economy to build here.
Yeah. Well, that's exciting stuff. And, just like the industry itself, the BRI is still just getting started. And it's exciting to think about what you will be able to achieve, what we will be able to achieve here in the future. So,
okay, well, thanks. Thanks to everybody. This has been our first conversation, and every week we'll be digging down on what's going on this week. Feel free to come to blockchainresearchinstitute.org to pose questions for us or things you'd like to see us discuss. Adios.
Take care.